ARS Pharmaceuticals, the symbol's SPRY, they have an FDA approval for a nasal spray, so epinephrine nasal spray. So now you can just go ahead and shoot it up their nose instead of having to use a needle. I think that's going to be a game changer, and this is a multi-billion-dollar a year annual market that they're just going to come in and sweep, I think, in a pretty quick pace.
Hello, everyone. This is Mariusz Skonieczny. I'm chatting with Steve, Unemployed Value Degen. Steve, thank you very much for joining me.
Well, thank you for having me. It's a real honor.
Okay, we're going to talk about your investment style. Maybe we'll talk about some stocks that you like, why you like them. But to tell us your background. I mean, it's an interesting name that you chose, Unemployed. And from what I understand, you are looking for a job. You were looking for a job, or you're trying to have your Substack pay for the bills. So where are you? Is it paying for your bills? Are you still looking for a job? What's going on?
Yes, Substack is paying my half of the mortgage. It's fantastic. They say you got to give a small business 3 years to really know where it stands, and I was able to cover my bills in about 1 year. So the community's been great, and it's been fantastic.
How long have you been doing the community?
So only about 1.5 years. I was a college professor, and I started after a year ago in May. So when the spring semester ended, I found out my contract wasn't renewed. The university got a new president, and her big claim to fame was that at her last university, she increased diversity from 16% to 25%. And then surprise, surprise, there were some white guys that didn't get their 1-year contract renewed. So that's how diversity works these days. I think the winds are starting to blow the other direction, but academia is pretty slow to catch on to trends. But I don't want to be too.
So what were you teaching?
I was teaching finance, and that was there's an old joke in teaching. I explained it so many times, eventually even I understood it. So I do think there's some advantage to having gone over the basics for so many years that it becomes second nature. Although I think one of my biggest advantages is I went to college initially for my undergraduate degree as a non-traditional student. I was already, I think, about 30. And college is a different experience when your prefrontal cortex is already developed and you have judgment. You don't fall for the things hook, line, and sinker. So I was always, when it comes to efficient marketplaces, it's kind of, they're somewhat efficient. There's a kernel of truth there, but there's a whole lot of cases where it doesn't work. And I think that...
especially in a small cap space.
Yeah. And that's why I focus on small caps. That's where the mispricing is going to be the biggest. That's where I can find the biggest opportunities. But it was really a huge advantage, especially with an undergraduate in economics and a graduate degree in economics. It was really handy to have my prefrontal cortex and to not just accept things as well, this is how they are because we said so. I think college would be better for a lot of people if they went later in life.
Okay. So that's interesting. So now, with having the fundamentals of finance, fundamentals of accounting, so ingrained, and when you look for stocks, especially in the small cap space, I mean, what is your criteria? What do you look for?
Well, if something's cheap, it has problems. So I find something cheap, and then I try and find out, okay, why is it cheap? What are the problems? And a good chunk of problems are going to go away on their own. A big chunk of the problems is just cyclical. And some problems are going to get taken care of because, there's a management problem and they're going to, they're in the process of swapping out management. Though sometimes it doesn't solve the problem. So I did a write-up on Kohl's, the retail store, and they... their problem was they had an interim CEO who was really making a lot of mistakes. The executive search process can take a couple of years. They spent 2 years with an interim CEO making mistakes, and they hired a new CEO. And within 2 months there, he was buying product from his girlfriend's company and got fired. So now they have to start the executive search all over again. So you look at situations where, mistakes are being made. Those mistakes can be fixed. The problems can be solved. And then are they going to be solved? And then get that valuation re-rating. And a lot of that is just cyclicality. People say you're just trying to decide, is this really obsolete or is it just out of favor right now? And I haven't finished my deep dive into this area, but one of the places where this conversation is really, really at its peak right now is in the chemicals industry, because China's building enormous capacity. And people are saying, okay, all these US listed chemicals companies that are trading at their cheapest valuations in years and years and years, are they going to go out of business to Chinese competition, or is petrochemicals just a part of life? And the funny thing about that is some chemicals are too volatile to be shipped. So there are some chemical manufacturing capacities that they have to make the product where the product's going to be used. There's no competition for China with that. And then some are too bulky to be shipped efficiently. So right now the narrative is, China's building this enormous, petrochemical capacity, and it's going to destroy all these companies. But depending on the company, depending what their product is, if you dig in, you're going to be able to find some that, for example, I found one that has a completely U.S. supply chain, all U.S. inputs and all U.S. outputs. And if the stuff they make is so bulky that it's expensive to ship, then it's got a pretty good protection. And there are other chemical companies that are more international, but I think I'm about halfway through deep diving into the chemical space and, trying to find some opportunities where there's this idea that people genuinely believe it's going obsolete and the sector is going to go under. And when that happens, there's going to be some opportunity there.
So give us some ideas of stocks that you like in that space.
Well, the ones I'm still trying to find one where the products are really too volatile to ship. I haven't found that one yet. The one that I found that's completely U.S. protected, so that as far as any stuff coming from China is going to have to fight uphill with tariffs. Yep, it's ASIX, Advan 6. So that's a company in the chemical space. You look at the stock charts, it's really bouncing along the bottom. It's forming a triple bottom right now. And the thesis is, well, China's building this huge capacity. And that's true. China's building a huge capacity. But when you take into account import tariffs, cost of transportation, a completely U.S. focused supply chain, and a lot of this capacity, so China is building this huge capacity because they don't want to be dependent on U.S. intermediate materials. But the raw material is natural gas and natural gas liquids. And that's what the U.S. is producing an abundance of from the shale patch. And China it's remarkable to have a country so big that's so resource poor. They just have very little access to their own natural gas and natural gas liquids. Oh, they're going to import it from Qatar. But I think I'm less worried about the competition from China than a lot of people. So this is a bombed out sector where people have given up and they've just said, hey, China's going to come and take everything. And I don't think that's going to be the case for every company.
Okay, and so I guess you went after this industry because it's so depressed, then the sentiment is so negative that you have a chance to find good deals.
Yeah. I mean, just for example, they're trading at about 35, 0.35 price to sales. Most companies, if they're in a decent part of the cycle, they're going to trade at about 1 times price to sales, unless they're a tech company growing aggressively. So just the return to normalcy, and that's going to be a triple. And then a lot of the stuff that these companies make, you look at the outputs, and they're things like automotive components, or manufacturing, construction components, housing construction components. All that stuff is just cyclical. We had a Federal Reserve that rose interest rates on a relative basis the fastest and the most they've ever been risen. So we went from an overnight rate of 0.3 to 5.3 in a very short period of time. And that does crazy things to the market. So, if you get some interest rate cuts here, and Jerome Powell's already starting them, but then you get a new Fed chair in May, with the labor weakness coming from artificial intelligence, the Fed is going to have a runway to cut interest rates so low that you can have an automotive boom, you could have a housing boom, and then the end market, the demand for all these outputs will rally. And that's true. That's going to be true in a lot of sectors. So you can kind of take your pick. There's a lot of companies that manufacture stuff for the home building industry, or the renovations industry, or the automotive industry. It's kind of The market's at all-time highs, but there's still these sectors that are so bombed out. Healthcare is starting to recover, but for a couple years, it was just, or at least a year, it was worries about RFK Jr. coming in there, and they're going to make all of the healthcare companies unprofitable. And that really turned around when the CEO of Pfizer went to the White House and shook hands and made a deal, and people realized, okay, they're not going to destroy all pharmaceutical companies. The entire healthcare sector now is investable again overnight. They've already rallied off the lows, but there's still some valuable things to find there. My favorite healthcare stock, it's a company called ARS Pharmaceuticals. The symbol's SPRY. And they're making are you familiar with EpiPens for allergies?
No.
So if you have a severe allergy, like all these kids today in school with peanut allergies, and they're so prevalent. I mean, we took my oldest to pre-kindergarten, and it was a very small pre-kindergarten. There was only 12 kids in it. You can't get 12 kids in the country without one of them having a severe peanut allergy. It's just so amazing how prevalent it is today compared to when I was a kid. So the drug to treat that is epinephrine, and they're usually done with needles called EpiPens. So every daycare and every ambulance and every airplane, they have these EpiPens on hand in case somebody goes into anaphylactic shock. The rate at which they're misused or not used. So you get these daycare workers, they're so scared of using the needle incorrectly, they just don't use them. Half the time, the professionals taking care of people will not use an EpiPen because they're afraid of needles themselves. And then a chunk of the time, they'll stab themselves in the hand. Or when they do use it, they don't know how to, pinch the leg so that they don't hit the bone in the thigh, and they have a misapplication. So the rate of misuse EpiPens is, if you see the numbers, it would shock you. Half of the people that get prescribed it don't even fill the prescription because they're afraid of needles. So ARS Pharmaceuticals, the symbol's SPRY, they have an FDA approval for a nasal spray. So epinephrine nasal spray. So now you can just go ahead and shoot it up their nose instead of having to use a needle. I think that's going to be a game changer. And this is a multi-billion-dollar a year annual market that they're just going to come in and sweep, I think, in a pretty quick pace. And the whole biotech space, the whole pharmaceutical space was depressed under this RFK Jr. fears that he was going to come in and drive them all out of business. I don't think that was ever going to affect epinephrine, but sometimes the sector flows affect everything. Now, ARS Pharmaceuticals has some competition. There's another company that has a mouth strip, and it's not clear who's going to take what percentage of the market. My take on that is, if you're going to be deploying the stuff to paramedics and school teachers, if somebody's not cooperating, nobody wants to pry their jaw open and put a mouth strip in. So the nasal spray is really good for people that are not cooperative. And people that think, oh, well, maybe in a casual setting, the patient's going to be cooperative. But I just think in emergency settings, people are going to be really focused on a cooperative patient or not, and how, paramedics don't want to have to be forcing people's jaws open and risk getting their fingers bit and stuff like that. So, and also, if you're familiar with drug overdoses, the opioid overdose drug Narcan, the management team for ARS Pharmaceutical, they have the technology, the patents for this nasal spray applicator. And when they were working for someone else, they developed the market for the nasal spray for the opioid overdose drug Narcan. They took 95% market share. So before, it was the same situation as EpiPen. You had to stab somebody with a needle to give them their opioid overdose drug. And now they just use the nasal spray. So in the emergency setting with the paramedics and the hospitals and all that stuff, I think it has a huge runway for growth there.
So with companies like this, because you were talking about, cyclicals that might have, depressed revenues and are trading at a very low multiple to a certain revenue. But then now you're talking about these pharmaceutical companies, and correct me if I'm wrong, they might not necessarily have revenues yet, but they have a product that has a lot of potential and it solves a particular problem, but they don't have the revenues yet.
So I try to avoid pre-revenue companies. ARS Pharmaceuticals they do have revenue coming in. Some of it is they are already selling product in the U.S. They have FDA approval, and they also have the foreign licensing. So they have approval in Europe, and they have a partner in China and Japan to distribute this stuff. So the revenue is coming in. Their competitor, which might take significant market share with the mouth strips, it remains to be seen, but they don't have FDA approval yet. They're not currently on the market yet. So ARS Pharmaceuticals has a head start. But my original thesis is they'd take 95% of the market like they did with Narcan. But with the situation with Narcan, the mouth strips were never approved. And this time it looks like the mouth strips, they had something called a no AdCom ruling. So there's no adverse committee is going to meet to. So anyway, odds of the mouth strip competitor getting FDA approved went up to maybe 80%. It looks like it's going to get FDA approved. So it will be a race with two horses. But I think what's really clear is EpiPen is going to go away. Nobody's going to want to use needles and worry about stabbing themselves in the hand or stabbing the kid in the bone or just not using it because they're afraid of needles. That's going to go completely away when you have something that has twice the shelf life, doesn't need refrigeration. You don't have to worry about the misapplication. I think everybody knows EpiPen is going to go away, and then the question is just who's going to take the most market share, the nasal spray or the mouth strips.
Mm-hmm. How do you find your stocks? Do you find them on social media? Do you do screens? How do you find them?
So I do screens, and then after I do my basic screens, then I try and get a feel for the industry, look at their competitors. Sometimes I find something cheap and I find a much more quality competitor that's almost as cheap because the whole sector is out of favor. So I do screens, but then I also there is a lot of crowdsourced research on social media. You check some of these threads where somebody says, "Hey, what's your best small cap idea right now?" and they get 100 posts. Sometimes 10 of those are really good, and 2 of them nobody's written up on Substack yet. So there is a lot of situations where the information is out there. For example, in between my undergraduate degree and my graduate degree, I worked as a financial advisor. So I'm pretty in touch with the senior citizen market, the baby boomer generation. And a company that I had found through screening was called Finance of America Companies. They're the market leader in reverse mortgages. And I bought that when it was $5 a share. It went up to $30 a share. It's retraced back down to 20. I think it's still a fantastic position, and it's still the market leader in reverse mortgages. But after I wrote about that, somebody in the comments said, "Hey, check out Abacus Life. It's very similar. Their commercials are on the television at the same time at the gym when Finance of America's commercials are on the television." I check out Abacus Life, and they're the market leader in life settlements. So that's my number one strongest buy right now, the thing I'm pounding the table the most on. They changed the name to Abacus Global Management. But life settlements is this really niche market where if you have a whole life insurance policy, and this is unique to the United States, that life insurance policy can be sold in the secondary marketplace. Right? Your life insurance policy is an asset that you own. That came from a Supreme Court ruling in 1911. So most countries in the world, your life insurance policy is just a contract. It's not an asset you can sell. Well, life insurance policies they're a $20 trillion asset class in the United States. I mean, that's bigger than the stock markets of Germany, Japan, South Korea, and I think the next 10 down the line. It's a huge asset class. Half of that is whole life, half of it's term life. So you figure a $10 trillion pool of life insurance policies is an asset class that can trade. And the market leader is just there's only one company in that space that's public. It's called Abacus Global Management. I think they've got about 30% market share. They're the current market leader. And the mechanics of this business are so incredible. 90% of life insurance policies never pay out, right? Between when people finally go into retirement and they're collecting their Social Security checks, they don't want to keep making these payments. They say, well, people get their life insurance policy when they're in their 30s, and they're worried about what happens to my wife if I pass away? Can she pay the mortgage? What happens to my kids if I pass away? Can they go to college? People take out a life insurance policy when they're 35 years old. They get to be 65 years old, and they say, my house is paid off and my kids are out of college. What do I need this thing for? So why am I going to send $200 a month to the life insurance company when I don't need this thing anyway? So 90% of life insurance policies never pay. They just lapse. Or if you're clever, you contact the life insurance company, they'll offer you a redemption amount. They'll offer you something like $30,000. Suppose you have a policy that says your estate gets $1 million when you die. The life insurance policy company offers you $30,000 just to buy out the equity you've accumulated. Abacus Global Management pays about 7 times that. Abacus Global Management is going to pay you something closer to $200,000. And that's actually a sizable chunk of money that'll make a difference in somebody's life. And this market's so underpenetrated. Last year, the entire life settlements industry did about $4 billion face value of policies. And about $450 billion of policies lapsed. And about $150 billion of policies were people that were old enough that they could have sold it, at a pretty good profit. So there's at face value, there's like $145 billion that was just left on the table last year because people don't know about it because there's not enough market penetration. That's a huge amount of money. I mean, this company could grow 20 times and the market would still be underpenetrated. It's all about marketing and getting the word out there. And what's so amazing about Abacus Global Management is they buy these policies for 7 times the surrender values. Life insurance company would offer you $30,000. Abacus Global Management offers you $210,000, something like that. They turn around and they mark it up 20% and they sell it to private credit funds. They turn over their inventory twice a year, so this stuff isn't even on their books very long. So you have this inventory you turn over twice a year and get a 20% markup on it, and they've got just this fantastic profit margins in this thing. So anyway, I don't want to go too long into any one company, but I'm pounding the table the strongest on right now. It's my strongest buy. It's called Abacus Global Management, and it's the market leader in life settlements. And it's just this fantastic business. It was only recently went public. It's very misunderstood. It's very niche. It's got such a runway for growth, though.
Okay, so you run Substack, and you write about many different companies. So my final question is, for those in the audience that wanna read some of your work, where can they find you on social media?
Yeah, so on Substack, I'm Unemployed Value Degen. I just got my gold star, which is pretty fancy. I think there's only one level of star above that, and it's purple. So I might be an adult, but I still like collecting Pokemon badges next to my name. So I have my little gold star on Substack, Unemployed Value Degen. And on Twitter, I think I call myself Unemployed Small Cap Value Degen, but the name's a little long. But you'll see my mascot is this eagle stockbroker in a suit. And I haven't told people the origin of that before, but there was a meme from years ago where it was asking, why do you always see eagles from the side? How come you never look at them head on? And it had the most, awkward looking eagle you could ever imagine. It's a really bug-eyed, weird looking bird. And that was how I felt setting up all these social media accounts, because I'm such a low-tech person, getting into Substack and Twitter, and then you have to connect to Stripe, and then I had to go onto Canva and do generated images and use ChatGPT and talk to chatbots. I was so outside of my element. It really reminded me of that meme where, it was an old one from maybe 10 years ago. Why do you always look at an eagle from the side in the profile? Why do you never look at them head on? And it's just this most awkward, ridiculous looking bird you can imagine.
All right. Well, thank you very much for doing this.
Thank you very much for having me, Mariusz.